Hello, everybody, and welcome back. The Vietnamese economy has delivered strong growth figures in recent years. This is attracting international investors. So today I talk to Thu Nguyen, head of investments at the Vietnamese asset management company VinaCapital, about investment opportunities in Vietnam. Welcome to.
Thank you, Thomas.
Two, let's start with the basics. So what is special about Vietnam's economy and what sets it apart from other emerging Asian markets?
Vietnam is already quite well known as one of the fastest growing economies in Asia, with GDP growth averaging 7% in the 5 years preceding COVID. After COVID, Vietnam sprung back even stronger with an 8% GDP growth in 2022 as the economy recovered from COVID. But generally, Vietnam, besides the high growth, Vietnam is also well known for its stability and its resilience, because Vietnam is probably one of very few economies in the world that achieved positive economic growth in both years during COVID. And in terms of stability, we can look at inflation and interest rates environment as well as the currency. In terms of inflation, Vietnam has averaged around 3.2% in inflation rate in the last 10 years. And the government normally targets an inflation no more than 4%. And so far, in all of the last 10 years, we've had inflation below 4%. In terms of currency, Vietnam dong has held up the best against the US dollars compared to other ASEAN currencies. What set Vietnam apart from other emerging markets are, first of all, the favorable demographics. We have 100 million people, of which 2/3 are in the working age group. The median age is only 33, and the level of education is quite high, with people being quite industrious and highly motivated. We also have abundant resources, including oil and electricity and other natural resources that are essential for industrialization. And of course, as I spoke to earlier, we also have the economic stability and political stability as well. And because of these advantages, Vietnam has been able to attract a steady flow of FDI, foreign direct investment, that has helped to transform the economy into a modern and open economy, with exports already exceeding 100% of GDP, and Vietnam being known now as one of the largest exporters of high-tech products.
Vietnam was one of the beneficiaries of the China plus one strategy of international companies. So how is the economy doing after the pandemic?
Vietnam was already a big beneficiary of the China plus one strategy even before COVID, as international companies sought to diversify away from China. The pandemic, as well as the geopolitical tensions, have only helped added to that demand. And it can be seen in the fact that Vietnam was the only Southeast Asian economy that did not see FDI fall off a cliff during COVID. In fact, Vietnam was able to maintain a dispersed FDI level of around $20 billion a year in these 2 years. And that accelerated to $22.4 billion in 2022. In recent years, we've seen more FDI from North Asian countries, apart from Korea and Taiwan, which have historically been the largest FDI investors in Vietnam. We have recently seen China emerge as a big investor. The obvious benefit is a lower tax rates when these Chinese companies export to the US using the Vietnam manufacturing base. After the pandemic, Vietnam's economy strongly recovered in 2022 with 8% GDP growth, on the back of almost 16% real retail sales growth and over 8% in manufacturing growth. But 2023 has been a challenging year due to the slowing global demand, affecting the exports of Vietnam because we are such an open economy. This slowing global demand inevitably has dented our export sector. This year, we have, for a long time, we've seen a negative growth in export numbers in the first 8 months of the year. The exports growth was actually negative, but we forecast that for the full year of 2023, Vietnam will still achieve 4.75% GDP growth on the back of a moderate retail sales growth of around 8% and almost flat manufacturing growth.
How do higher inflation, higher interest rates, and higher commodity prices affect Vietnamese companies?
Well, in terms of inflation, actually, Vietnam's inflation is not a major concern at the moment. Our average 8 months CPI number was at 3.1% year on year, which is well below the government's target of 4.5% for 2023. That said, there is some food price inflation pressure towards the year end that we need to be mindful of. But overall, we think inflation will not exceed the government's limit of 4.5%. In terms of interest rates, it's not concern as well because the SBV, or the Central Bank of Vietnam, was actually the first central bank in the world to cut interest rates. And they have done it 4 times this year to bring our average 12-month deposit rates down by 200 basis points to 6%. At this level of interest rates, we think it's conducive for the economy to resume its growth and recover from any challenges that we had earlier in the year. We do forecast a small further interest rate cuts by the central bank, but even if it doesn't happen, we think that the companies in the economy will have ample support from this conducive interest rates environment to recover in the second half of this year, as well as in 2024. In terms of commodities, it's rather a mixed picture. In terms of soft commodity, we're seeing, many companies that are benefiting from higher selling prices and also lower input costs. Some companies that are benefiting from margin expansions as their input prices decline sharply this year include Vinamilk and BMP, a plastic company. In other agricultural companies, such as fertilizers, we have seen, fertilizer prices increase, sugar price, and as well as rice price increase, therefore benefiting some of the companies such as QNS and LTG. In hard commodity, which is oil and gas, we are seeing the aviation companies being hit by higher oil prices, and more impacts will be seen on long distance flights. However, the higher demand post-COVID lockdown has well offset for this.
Emerging markets in particular often have some weaknesses in corporate governance. So what is the case in Vietnam?
It may be true for Vietnam's case, especially if you compare Vietnam with the more developed markets like Singapore, for instance. But Vietnam, if you look at the history of the 23 years of history of the stock market, we can definitely say that corporate governance has significantly improved over the years. The regulators and the exchange are committed to higher standards. They have raised, the standards of governance as well as disclosure. Companies are now encouraged to provide information in both Vietnamese and English. And we already see all of the companies within VN30, which is the index for the blue chip companies in Vietnam. All of them have already published information in English. IFRS, which is the International Financial Reporting Standards, is being adopted on a voluntary basis and will be mandatory by 2025. So basically, Vietnam is committed to higher standards of disclosure and financial reporting standards. Companies are also starting to embrace ESG and adopt the international ESG standards, with some already getting international recognition for good practices in ESG, such as VinaMilk.
Recently, various members of the government have been replaced. So looking at China, how do you assess the political risks in Vietnam?
First of all, I would like to point out that while Vietnam shares the one-party system with China, we do not have, similar economic issues or political tensions that China has. So Vietnam's political situation would be quite different from China's. In any case, political stability is actually Vietnam's strong suit. And despite some of the recent noise and headlines, Vietnam's political stability is much better than people from outside would think. This is because there is a clear consensus within the government about the need for Vietnam to have a pro-growth and pro-foreign investment economic policy. And this in turn ensures a resolute continuity of key government policies, irrespective of who is in the office. Or despite the recent small reshuffle, we do not think that it has changed the course of our economic development or our economic policies at all, because people within the government are all equally committed to developing the economy to its full potential.
Rising consumption due to higher incomes. To what extent does this hold true for the Vietnamese economy? And where do investment opportunities arise from this theme?
It is definitely true for Vietnam's case because the transformation, the farm to factory transformation, which has seen Vietnam rise as a major exporter of the world, has also helped the people of Vietnam achieve a higher level of income and therefore residual income to spend on discretionary items. So we've seen the consumer market in Vietnam developed quite significantly over the last decade. Real retail sales growth has averaged 12% in the 5 years preceding COVID. And as I pointed out earlier, in 2022, we achieved almost 16% of real retail sales growth. So there is, a massive force in the domestic consumption market to bring about opportunities for many companies within this sector. We can also see that urbanization for Vietnam is currently below 40%, which is 20 years behind China. So together with this domestic consumption, the urbanization trend will also bring about opportunities for companies within real estate and construction materials and home furnishings and so on. So we see many opportunities in consumer staples and consumer discretionary, including retailing chains and pharmaceutical companies or healthcare, such as hospital companies, would be the most obvious because as the GDP per capita level in Vietnam reaches $4,000 as it did recently, we are at this spurt of growth that will see a huge rise in the domestic middle income class in terms of both the size of this group as well as the income level of this group that will continue to power the strong growth of the consumer sector for many years to come. But apart from the consumer companies, we also like the banks, especially banks that have a large retail exposure or banks that have very solid retail banking strategy that can benefit from the rising affluence of the Vietnamese domestic consumers. The boom in e-commerce would also benefit companies in logistics and in IT services. It's worth noting, however, that the stock market in Vietnam is not fully representative of the economy. So there are many companies where one would naturally think of as having a great opportunity to do well, such as e-commerce companies. They are not currently represented in the stock market yet. And also the second point is there is a wide dispersion of quality amongst companies within the same sector. So when I say banks, I don't mean all banks are equally good, and therefore stock picking is very important in this case. I think that it's generally important for Vietnam as a frontier market, but even more so in this case when we're talking about picking the right themes and the right sectors. But more importantly, it's about picking the right stocks.
So this was Thu Nguyen, Head of Investments at VinaCapital. Thank you very much for being with us today and sharing your insights into the Vietnamese economy and the Vietnamese stock market.
Thank you very much for having me.